Given that I think crypto is going to stun the world, at least the way I've positioned in certainly Bitcoin, the biggest. The key drivers, there are three. The first is it is becoming a substitute for gold. The second reason, institutional investment. Institutions probably have trillions to commit to digital assets broadly, and Bitcoin only has 100 billion more that will ever be minted. Younger people prefer Bitcoin than gold, and I think they do believe that it is basically the same thing. Both of their prices are determined by scarcity value.
As the market gears up for the coming bull run for Bitcoin, we hear from Cathie Wood and her current market outlook and predictions for crypto and Bitcoin in the weeks ahead. As the momentum is building and the institutions are quietly positioning themselves, Wood says everything is about to change. She says the next phase of the crypto cycle is critical, and she's stacking big bets in her portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Cathie Wood says she's remaining bullish on digital assets after increasing her position size during the last bear market. Embracing an unyielding enthusiasm for the crypto realm, Cathie Wood confidently predicts that explosive growth is looming on the horizon. She urges investors to capitalize on the opportunities presented during market downturns as well. Ever since Bitcoin tumbled from its all-time high, the cryptocurrency market has struggled to regain its footing, leaving investors anticipating a substantial bounce back. However, Cathie reassures that a long-expected surge awaits. Let's get right into the latest interview with Cathie Wood, as she gives her market outlook and prediction for the days and weeks ahead.
I'm half and half crypto, and just to give you a sense, half and half crypto and equities, hardly any bonds. So given that I think crypto is going to stun the world, at least the way I've positioned in certainly Bitcoin, the biggest. And in the case of Bitcoin, right now we're moving towards 20 million Bitcoin having been minted since the beginning of its existence in 2009. The number that it will be in existence ever is 21 million. So only 1 million more to go, which is about $100 billion. So scarcity value is becoming more important, especially since for the first time, Bitcoin's supply growth dropped below the long-term supply growth of gold, which is 1%. With the latest halving last year, the supply growth now is roughly 0.9%, and that will continue to go down with time, which is unlike gold. If the gold price keeps going up, that supply growth will pick up in its pace. That cannot happen with Bitcoin. The second reason is institutional investment. Now, Bitcoin represents three things. It's a technology, so the blockchain underlying Bitcoin, which is a layer that the internet missed out on in the early 90s because developers had no idea financial services would take place on the internet. So now that is now being put in place. It is becoming a substitute for gold in terms of a store of value. Younger people prefer Bitcoin than gold, and I think they do believe that it is basically the same thing. Both of their prices are determined by scarcity value. And it is a new asset class. It does not behave like other asset classes. Sometimes it behaves like the NASDAQ, sometimes it doesn't. Sometimes during the regional bank crisis in the US in early 23, it boomed because everybody understood no counterparty risk here like the banks had back then. So it doesn't behave like any other asset. And that means that institutions and asset allocators have a duty to assess whether it deserves a role in the portfolios or their asset allocation. And if they say no, they better have some very good reasons. So the $100 billion that I mentioned, institutions have to either take up those newly minted Bitcoin, and that's going to happen over years and years, or they'll have to pay up to get holders to sell it. So again, scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning. If you look at Bitcoin over time, the volatility was incredible in the early days, 200, 300%. It has been coming down consistently, 40, 50% now. And if you believe in the scarcity value of Bitcoin, just like gold has had ups and downs, you're going to be willing to put up with the volatility. But it's the sort of asset where you put it in your portfolios and then just leave it there. I mean, there's going to be trading around it, and that's great for the exchanges. We're involved with Coinbase. That's great for exchanges. But for individuals and institutions, it's a buy and hold asset because it is in such early stages. And really, think about that. Institutions probably have trillions to commit to digital assets broadly, and Bitcoin only has 100 billion more that will ever be minted.
Cathie says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Cathie has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
I have bought Bitcoin outright. Many of our clients wouldn't let us put it in the portfolios, so others are playing it through Coinbase. Robinhood is developing a crypto strategy as well. SoFi is developing a crypto strategy. eToro here in Europe just went public, and we added it to our portfolios. It has a crypto strategy. Many are forced to go in directly just because their platforms. I'm thinking about advisors now. I realize you're DTC, so your clients can buy it outright. The last thing that I'd like to add is there is a way to kind of straddle the two, and that, of course, is ETFs. So spot Bitcoin ETFs were approved. The SEC approved them last year. ARKB was one of them. That's ours. And so that is sort of a way to leg into pure play Bitcoin exposure instead of dealing with a wallet provider. Through the lens of innovation, I have never been more bullish. And one of the reasons for that is if you look at the financial markets really over the last 4 to 5 years, and the equity market in particular has performed in a very narrow way. Very few stocks delivered the bulk of the performance. In fact, if you look at the Mag 6 over the last 5 years, they're up 5-fold, while truly disruptive innovation, not saying that they do not innovate, but truly disruptive innovation is up only 30% if we look at that segment of the market. We think those places are going to switch going forward. So very, very bullish. Well, there are 3 of them there: robotics, energy storage, and AI. 3 major innovation platforms. Each one has its own S-curve, And now they're intersecting. One is feeding the other in the form of autonomous taxi platforms. We think that's an $8 to $10 trillion opportunity globally in the next 5 to 10 years. So exponential growth all the way. We have in our Big Ideas 2025 forecasts for both of those, as you say. So which one do we believe will get there first? I have to say Tesla, hesitantly though, only because the distance between here, say $330 and $2,600, is less than the distance between 104,000 and 1.5 million. But our confidence in both is very high. Just want to emphasize that. This is a bit of a deja vu moment in my own career. This period reminds me of the early days of Reaganomics in the early 80s. And Reagan was cutting taxes, deregulating, and focusing on getting interest rates down. Trump is getting tax rates down in more ways than Reagan did, in that he's trying to get tariffs down. So if you look at the 80s and 90s, those were the golden age for equities. I think we could be entering into another period like that. Our strategy is volatile, more volatile than the market. And that's because these are long duration strategies. So they do get hit harder during turmoil. But the ironic thing is when consumers and businesses are afraid or concerned, worried about the future, they are more willing to change the way they're doing things. So better, cheaper, faster, more productive, more efficient, more creative products and services. That's what we do. So what you usually see towards the end of a correction or a bear market is our stocks tend to start outperforming before the broader market does. And that has happened in this time as well. We went through tariff turmoil. We went down more than the market, and now we're up more than the market. And the question now is, will this be sustained? If we're right that we're moving from a rolling recession to a strong recovery with surprisingly low inflation because it's going to be productivity driven, I think we're in for very good days.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.